Every homeowner in Minnesota faces the same question at one point or another. Should I sell or should I rent? And the answer that your realtor gives you is going to depend completely on what's in it for them. Realtors pay when you sell, property managers get paid when you rent. Almost no one's going to give you an objective answer. In this video, we're going to go over both scenarios. What it looks like to sell your home, what it looks like to rent your home, and what are the actual costs associated with both. Then we're going to go over what the right situation looks like for you. And stick around to the end because I'm going to tell you the one factor that usually determines which one's the right way to go. It's not the market and it's not the numbers, and almost no one is talking about it. I had a homeowner reach out to me not long ago. They had bought the home several years ago. They were getting relocated for work now, but they weren't in a rush to sell. The home was in really good shape. They were in a decent neighborhood, and he had built up quite a bit of equity over that time. They had talked to a realtor who told them that the market was hot and it was strong and it was a great time to sell while things were going good. They also talked to a property management company who told them that it was a great time to rent out and that demand for rent was high and that they would net enough income to comfortably support their mortgage and cash flow a little bit extra. Now, both sides weren't lying. They were telling the truth, but they were telling their truth, right? They were saying what was in it for them. They weren't talking about what was in it for the customer, of what renting looks like and the cost associated with that. There's insurance, taxes, the vacancy cost, meaning that when they're not being rented out, how much it costs to hold the property. And then of course, Minnesota is a very renter-friendly state. And so being a landlord can be very difficult sometimes when it comes to a legal standpoint. And that's what the conversation is really all about. So let's do it right. Quick intro. I'm Aaron Zenfennig with Titan Real Estate Group. I help homeowners across the state of Minnesota make clear-headed decisions about the largest financial asset that they have. We give everyone the full picture and not just the version that benefits the person who's talking. Here's what they're not talking about when selling your home in Minnesota right now. The market is pretty balanced. It's not hot, it's not cold, right? But average price is about $330,000 to $350,000 depending on the source. Homes are appreciating about 1% to 5% depending on the location. The average days on market is about 44. And when we talk about the Minneapolis market specifically, homes are still moving pretty fast at either above asking price or right there at asking price. The case for selling your home isn't wrong. It's just that they're not talking about all the costs that it's involved. In the state of Minnesota, it costs roughly anywhere from 7 to 10% to sell your home. That's including commissions, tax, the IRS. If you have a lot of equity, then you're going to be paying capital gains tax, any repairs that you need on your home, title fees, staging costs, all that good stuff. Titan Real Estate Group, we cover your staging costs. But yeah, anywhere on a $350,000 house, that's anywhere from $28,000 to $35,000 before you see a dime in your pocket. Additionally, if you're selling to go rent in a home, you're giving up a fixed monthly cost, right? So your monthly mortgage is fixed to a variable rental rate, right? Because each year the rent rate can go up and who knows what rate, depending on the situation. And then you're also missing out on appreciation and all that good stuff like that. And then part of your mortgage payment is actually reducing your principal, whereas your rent is just being thrown in the garbage and reducing your landlord's principal. So those are all things that you got to think of when you're deciding to sell and go rent a home. So something that your realtor may not be telling you is the real cost of selling your home. It might be clean and simple, but that net number you walk away with is nowhere near what the purchase price is going to be. The rental case is also very compelling, especially if you have low mortgage or if your house is already paid off. The average monthly rent in Minnesota is about $1,600 and Minneapolis is right in line with that. And so again, if you have no mortgage or a very low mortgage, it sounds like easy cash flow, right? But here's what the management companies are not walking you through. Minnesota is a very tenant-friendly state when it comes to renting. And that's just not my opinion. That's a fact. You can look at the legal framework and it is structured very heavily to benefit the tenants and make lives more difficult for the landlord. Then when they move out, you have 21 days to get them their security deposit back, and you have to include a detailed invoice on why you deducted things. And that has burned me in the past where I have gotten them their security deposit back and something that I couldn't see arose a week after they moved out, or a week after that 21 days, and I had to give them their deposit, so I didn't have enough time to really decide. Things like that you can get burned from because it's so quickly to return their security deposit. You have to issue certificate of rents paid that by January 31st at the end of the year, or the beginning of each year for the previous year for tax purposes. There's also things like the eviction process. The eviction process can be an absolute nightmare. And again, that's because the state of Minnesota is so tenant friendly. Speaking from personal experience, I've been burned for tens of thousands of dollars trying to evict somebody over a 6-month period. And you'd think if someone's not paying their rent and they're destroying your property, it'd be pretty easy to get them out, but not the case in Minnesota. Some other things that they don't talk about by making the state being tenant friendly is the security deposit capped. It's capped at 1 month of rent. So you can only charge 1 month of rent, and the average rent is $1,600, right? So if you charge a $1,600 security deposit and that tenant causes more than $1,600 worth of damage, you are are responsible to cover that. And let's face it, $1,600, you can barely paint a bedroom for that price. The other thing too is that there's a 3% annual rent increase cap. So if the cost of that property goes up greater than 3% year over year, like taxes, insurance increases, things like that, or an assessment by the city, you cannot raise the rent more than 3%. You have to cover those differences. So both things to definitely think about when you're thinking about renting. Furthermore, there's even more expenses coming with renting that you don't think about. There's property tax, there's insurance, which is higher usually for landlords than it is for a homeowner. There's vacancy fees, right? So if the home sits there without a tenant in it, you're still paying the mortgage. There's maintenance costs. On average, they say it's about 1% of the home's value in maintenance costs annually. So for a $350,000 home, that's about $3,500 annually in maintenance costs. I don't know if it's quite that high, but in my personal experience, it's not quite that high, but that's the average numbers. 1 month of vacancy costs you probably 2 to 3 months of your profit of a filled tenant, right? So if it sits vacant for 3 months, that's 9 months, almost a full year of your entire profit gone. And then also if you have a management company, because most of us aren't professional real estate investors, right? You have a full-time job. To become a landlord is another full-time job. And some of us just can't do it between kids, family, all that good stuff, right? So if you hire a management company, they're sometimes taking out 10% of your rent each month, which just makes your profit margins drop lower, lower, and lower. And then there's the cost of time. So if you don't want to hire a management company, again, like I said, it's a full-time job. So how much is your time worth? That's something you got to think about. And so what that property manager is not telling you when he's saying, yes, rent, 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 is really what that actual net income is each month. And in the state of Minnesota, because of all the reasons we just spoke about, it's much thinner than in a lot of other states. Something to think about for sure before renting out your home. So let's talk about which one's the right decision for you, whether to sell or whether to rent. So selling wins when you need the cash right away, or you're unable to handle the legal responsibilities, that you're going out of state and don't want to deal with an out-of-state property, or just don't want to deal with the headache of being a landlord. And then obviously if the cash flow is not greater than your mortgage, then that definitely would not make sense. So renting would win when you are in it for the long game. It's not a quick solution. You're not going to get a ton of money right away. It's more so you're playing it out as, I think of it kind of as a retirement, right? So that's kind of my retirement plan is I buy a bunch of rentals, hold on to them for 30 years while the renters pay off my mortgage. Then I have a paid off asset at the very end to net more money. Another time it makes sense is obviously when your mortgage is less than the market rent. If you can make sense of cash flowing and it's worth it for you, then obviously that would make sense, right? But it's got to be cash flowing. Otherwise it just does not make sense. Some people, you also have to define what success looks like for you specifically. Every landlord is going to have a different version of success. And while some people are happy at a 10% return on investment annually, some people are only happy if it's a 20% return on investment annually. Kind of just looks at where you are at. If you're not a professional investor, usually that 10% is kind of more an okay number for you. Kind of thinking like, because you're cash flowing 10% each month and you're getting the equity and you're getting the appreciation. So your principal's dropping, your appreciation's going up, and you're getting that monthly couple of $500 or whatever, right? So all those things combined is definitely a positive. Professional investors usually want a little bit higher than on the 10%. So definitely we can talk more about that. Another thing is if you are moving and you might want to move back. So sometimes we have a certain circumstance where, oh, I have to go to this area for 2 or 3 years to help mom and dad out, but then I do want to come back because I love this. So that's also another opportunity to rent where the numbers aren't as big a factor, right? It's more about what you want and what makes sense for you, as with all this does. Another thing to think about is what are your future long-term plans? Are you planning on coming back? Do you not want to come back? Those kind of things. What is the number to actually run when deciding between selling and renting? So you're going to take your market rent, right? You're going to subtract your mortgage payment. You're going to subtract insurance. You're going to subtract taxes, if it's not included in your mortgage payment, that is. Then you're going to subtract 10% for vacancies. You're going to subtract 10% for repairs over annually. And then if you do a management company, you're going to subtract another 10%. So take all that math, and if that number comes out thin or negative, we may not want to do that. Depending, then it doesn't matter what the gross rent is if that number is negative or thin. So that's the math. And as I spoke about earlier, what is the factor that actually determines which way to go? The one that nobody talks about. It's not price, it's not profit, it's not any of that stuff. What it is, it's timeline. Not the market timeline, not the rental timeline, your timeline. What are you trying to do? For example, if you're moving out of state for a job, you think that you might quit that job in the next 2 or 3 years. Renting out might make sense no matter what the number is. That way it keeps your options open and allows you to move back to Minnesota in case you want to. If you're permanently moving out of state and you know that you're not coming back, holding on to the property for renting in a state like Minnesota that's just very tenant friendly, a lot of people just aren't up for that kind of commitment. It's a lot harder than people think to do something like that, especially from out of state. The equity sitting in your home may be better used elsewhere. So taking a look at the numbers and seeing what your return on investment is, you could maybe possibly take that equity in your home, put it in the stock market, some other kind of investment, and get a greater return on it. Or depending on where you're moving, maybe look at that market and look at buying a rental property there. That way it's easier for you to manage because it's closer. The laws and rules may be a little bit more laxed for landlords if in a different state. Something to definitely consider wherever you are moving. Definitely take a look at the laws and see how that is affecting landlords, and obviously do some research in that sense. But yeah, those are definitely things that would make selling the home right away and something you can do with the equity. Again, I'm a big numbers guy, so it's all about return on investment when renting. Most of the time, I guess I should say, like in that first example, that would be more of an emotional decision where if you wanted to keep your options open, the money's a little bit less for you. But if money's a big factor, it's just math, right? There's nothing to it. It's just, what's your math? Are you down for the long haul? Make that retirement plan, that property, or part of your retirement plan? Or are you more about the short game and you want to get out, get your money now, and do something else with it? So the question that almost no realtor and no landlord is going to ask you is, how sure are you of where your life's going to be in the next 3 to 5 years? That is really going to be the determining factor on whether or not you want to rent out your home or sell it now. All right, guys, so this is where I want to hear from you. Who's out there deciding whether to sell or whether to rent, and who has questions? You can drop down your questions below. What's the biggest factor weighing on your mind right now that we can help each other talk about and make sure that we make the decision that is right for you and your timeline? Drop the comment below. I read every single one. Let's get the conversation started.